We're back for another episode of the Mortgage Broker Podcast. A bit of a different format here today. It's just myself, Dean Lawton, going to introduce and pass the mic off to an event that we pre-recorded about a month ago for a Better Way Mortgage Group, and that was co-hosted with Equitable Bank, one of our largest partners on the alt side, and more importantly, the reverse mortgage side. This event was an exclusive reverse mortgage seminar for our top Equitable Bank brokers. We had about 70 mortgage brokers from ABW at the event, and each one of those brokers was encouraged to actually invite a referral partner of their own, which was the first time we did that. And to be honest, that was a great hit and great reason in its own right, and we'll touch on that shortly. But each of those brokers were encouraged to bring a financial planner or perhaps a realtor that could benefit from this same information. And it was pretty neat to just uncover some of the opportunities that certainly can benefit those other partners, and more so the negativity or the negative connotation that reverse mortgages had or have with financial planners and their ability to come and listen to an educator and an expert in that space. So Dan Hultquist was the keynote speaker and the focus of the event. He is renowned as one of the largest and most respected reverse mortgage advocates, not just in the US and North America, but globally. He is an author of Understanding Reverse and Navigating Reverse. Both of those books are globally the most sold reverse mortgage books in the world. So from that perspective, he has a lot to bring from a perspective of education and just really better positioning reverse mortgages and understanding them. So that was the focus of the event, and I'll touch on just a little bit what you can expect from listening to the full length of this podcast. It's certainly going to be a little bit longer, just given the fact that we did record the entire event. I believe probably ran about 45 minutes on stage with Dan. And what you can expect from this seminar is you can gain insights on uncovering and understanding borrowers' expectations. Equip yourself to confidently address fears and inquiries, and ultimately leave this podcast with an enhanced confidence in your ability to promote and sell reverse mortgages. So with that, I will pass off to Dan, and I hope you enjoyed this episode. And ultimately, if you do find value in this episode, and you may find yourself one of those partners or one of those brokers that has partners that maybe don't look so positively on reverse mortgages, just given the negative connotation that they do have, feel free to share this episode and ultimately see what they think of it after listening to Dan. And if you want to reach out to Dan, he's more than open to reach out to you from a coaching perspective, or ultimately want to buy his books and just learn more about reverse mortgages and ultimately understanding reverse mortgages. I definitely implore you to do so. So hope you enjoy, and looking forward to the next one. Welcome to the Mortgage Broker Podcast, tailor-made for Canadian mortgage industry professionals. Proudly presented by a Better Way Mortgage Group, this podcast is your trusted source for insider insights, market updates, and strategies to elevate your career in the ever-evolving world of mortgage brokering. Whether you're a seasoned broker with a Better Way Mortgage Group or an industry enthusiast looking to stay ahead, our episodes are designed to empower you with the knowledge and tools you need to excel in the Canadian mortgage space.
We were reminiscing this morning about 2008. Do you guys remember 2008 well? That was fun, wasn't it? Yeah, 2008 was a disaster for those of us who are in the mortgage space. And I had 2 young kids at home. And so for me, my wife, she had a business that was doing okay, but she said, what are you going to do now? Your builders aren't building, your realtors aren't selling. And I said, well, I have all this mortgage knowledge. How about if I go downtown Atlanta and help save people's homes, right? It doesn't pay very well to be a loan modifier. I guess they called them foreclosure specialists. But what I did was I helped homeowners try to navigate, what now for them. And kind of a thankless job. You wind up crying with a lot of people, disasters. I mean, it was very difficult work. But I remember one night when I was particularly irritated with a couple banks that I could not get to modify a guy's loan. And he only owed $9,000 on his mortgage. He had some back property taxes, but I couldn't get this deal through, and he's going to face foreclosure. And I just yelled out. I said, why can't I help this guy? And someone from across the room in a high rise in downtown Atlanta said, how old is he? Critical question, right? We know now that's a critical question. Back then I said, what does that matter? It doesn't matter. He's a 65-year-old veteran. He goes, oh, patch him over to me. Transfer the call over to this guy. And the guy actually gave me a lesson on reverse mortgages that changed my life. And that was 2008. And I've never looked back. We're going to have a conversation about reverse mortgages, opportunities in reverse mortgages, and then we're going to open it up for questions at the end. But I want to start with international reverse mortgages. This is something I'm passionate about. I started writing Understanding Reverse 10 years ago. It's in its 10th edition now. Navigating Reverse just came out recently. But this is one of my proudest moments, was in 2016 when I wrote kind of a definitive guide on all the reverse mortgages that are available internationally. You can see that Canadian flag right there in the middle. You see that? Yeah, and so there were a lot of countries that were offering reverse mortgages, and we found, yeah, there's a lot of similarities. And then they started buying my book in Southeast Asia. One of my proudest moments was, hey, they just bought a book, bought a whole box of books to send to Southeast Asia for a symposium on home equity release strategies. And I thought, oh, I'm really interested in what everybody else is doing around the world in reverse. So I started comparing them, and what I found is we're not that much different. We face the same demographic challenges. We have a slowing housing market. We have limited supply. We have, gosh, your property values here. Oh my gosh, your property values are ridiculous up here. Okay, so when you think about retirement and the retirement crisis, their largest asset is their house, right? For many of your clients, their largest asset is their house. We have the same consumer protections. Here in Canada, we call it the no negative equity guarantee. That's better than other countries, where we talk about the non-recourse clause and all these other terms. Here in Canada, it's the no negative equity guarantee, which is extremely descriptive. But you have an advantage that other countries don't. The products that are offered by Equitable Bank are extremely inexpensive. Now, I don't know if anybody knows about the US market for reverse mortgages, but we pay 2% of the property value up front to the federal government. Are you doing some math in your head right now? Typical $1 million property, you're going to pay $20,000 to the federal government just to start the insurance program, plus $6,000 in origination fee and other costs. You're going to pay well in excess of $30,000 for a product that you can get here with a credit for the $995 now? Is that made public yet? I guess it is now. You guys, you're used to spending $995 to get a reverse mortgage in fees, and they're waiving it? That's amazing. All right, that's unheard of in other countries. So the products that you have available to you are extremely competitive with interest rates, LTVs, and the cost structure to get it. Also, your products begin at age 55. Now, I believe Great Britain offers 55 right now. There's some other products available internationally where you can get down to 55, but they're not attractive products. And they're not like Equitable Bank's products. Now, I'm 55 this year. In a few weeks, I'll be 55. Okay? It makes me think, right? In the United States, we have to wait until we're 62. Now, a spouse can be under 62 in the United States, but again, they have limited protection under that program. But age 55, that's extremely aggressive. So, products are very similar internationally. When I originated reverse mortgages, one of the things that I like to do is I had a checklist, and I would encourage you to do this too. I created a 13-point checklist of things that I wanted every borrower, their spouse, their kids, their financial advisor, their realtor, their trusted advisor. I wanted them to know 13 key things about reverse mortgages. My book details some of those. I think it has all 13. I'm now up to 20. So if I present the reverse mortgage options to a client right now, I go through a checklist and I actually put it in front of them. And I go through, and I don't script it. It's just, what is a reverse mortgage? Let's talk about that. And when I'm done talking about it, I check it off. Do you have any questions? And so just have little check boxes for each one so that they know I covered everything thoroughly. What is a reverse mortgage? It's nothing more than a lien or a loan against your home where repayment is deferred sometime into the future. That's it. If you want a simple explanation of what all reverse mortgages are, they're the most patient loans in the world. Remember that. Okay, that's a great descriptor. It's been described as the most patient loan in the world because we're going to give you money right now, and we're not going to ask for it back until, in some cases, a long time after you've passed away when your heirs sell the home. That's extremely patient. So reverse mortgage in its most simplest sense is just a loan. It's just a mortgage, similar to a home equity line of credit, but it's extremely patient in that we're not going to ask for the money back until the home sells in the future. We're going to cover some of the misconceptions a little bit later. And the eligibility requirements are going to be different depending on the product and where it's originated. Some of the responsibilities are similar from country to country. I generally hold up two fingers. Number one, you have to occupy and maintain the property. And number two, you have to pay your property charges. And Simone's saying, yep, that's consistent here too, right? Okay, so two things, occupy and maintain the property and pay all your property charges, property taxes, insurance, and things like that. It's as simple as that. It's your only responsibility. You don't have a responsibility to pay a monthly principal and interest mortgage payment. Every country, like I said, has a different descriptor for the guarantee. No negative equity guarantee. That's brilliant. I love the way that's phrased. Now, regarding how much money you can get, what are the product options? What are the payout options? You're going to want to talk to your channel manager or business development managers and Simone, Lisa, and Ivanka. Who am I missing here? Where are my Equitable Bank team? Yeah, they're in the back. You're going to want to talk to them about the specifics and how much you qualify for because I don't have access to that software. All right, this is a diagram from my book, and I think it's very important. When I got into the space, when I got into the reverse mortgage space, every one of my clients was over there at level 1. They were needs-based borrowers, and that may be your perception of the product today. Nothing could be further from the truth, that is the only reason. Simone mentioned it has a reputation of being a last resort product. Well, my boss got one last year, and I can assure you he makes a lot of money, doesn't need a reverse mortgage. He did it because of some of the tax advantages. He said, I don't want to be making a mortgage payment right now. I have other better things to do with this money. But ultimately, he got one the day after he turned 62. But it seems like even globally, everybody thinks that you have to be desperate to get a reverse mortgage. And it's just not true. Now, can we help them? Yeah. If somebody's house rich, cash poor, needs money now, we called it crisis management. And that's generally what we did from 2008 until about 2013. Crisis management. Let's help people out of their crisis. But we've moved beyond that. And I think every lender, broker firm needs to realize that there's a much bigger market at level 2 and level 3. Now, it's very rewarding to help people in need, but it's just very limiting right now. What about lifestyle enhancement? Lifestyle enhancement is, yeah, I'm house rich, cash poor. I don't really need a reverse mortgage, but I want a new kitchen, but I don't want to pull it out of my retirement savings to do it. Maybe I want to travel to see the kids and grandkids. Some of our clients tell us they want to travel to get away from the kids and grandkids. Have you seen that one? It's funny how you get to retirement and then you become a babysitter full time. And so they're like, you know what, put me on a cruise. But I don't want to draw money out of retirement to do it and sacrifice, future earnings on those investments. And so a lot of people want to enhance their lifestyle with, paying off that existing mortgage, increasing your cash flow, maybe updating the bathroom to meet your physical limitations. We see that a lot too, don't we? Yeah, we need to build houses that allow for aging in place. A stat came out recently in the US that said only 10% of homes are actually built for people to come home from the hospital. Only 10%? So, we need access to different rooms, wheelchair access. We need a bathroom that's fit for somebody who has multiple hip replacements or knee replacements. Those kinds of things happen as you age. And so maybe retrofitting the house to meet the needs of those who are aging in place. Maybe you need a new car. Maybe you've been putting off maintenance to the home. Anybody have senior clients that put off maintenance because they don't want to pay the money? And they don't want to pay the money because they don't want to pull it out of another account that hurts their retirement cash flow. All right, number 3, and this is very rare that you actually have brokers that understand the implications at level 3. Now, we have some specialists in the States. Obviously, the tax laws here are a little bit different. The financial planning implications are a little bit different. But imagine, we'll see here in a moment, a client who has 0 cash flow right now, gets a reverse mortgage, it has an additional $3,000. I think a financial planner or a CPA or a tax planner might have some ideas about what to do with that extra money, right? They can optimize their retirement plan because now they can actually afford to. The last thing I'll mention is that we're seeing a resurgence of the what we call a HECM for purchase product. It's a reverse mortgage for purchase where you can actually buy a home and get a reverse mortgage in the same transaction. We're seeing that actually quite a bit in the States right now. The problem we have is people are sitting on a mortgage in the 3s, and we're telling them they've got to refinance or they're going to purchase their home and finance something in the 6, 7, 8% range or higher, and they don't want to do it. How about no payment? All right, we can actually contribute a portion of the sales price, and they have no monthly principal and interest mortgage payment. So why are we so concerned about interest rates? So there's a huge potential market for the purchase product. Now, I'm going to open up this little example. Carl and Kathy, we use first names, the first letter of each name to tell us what case study it is. You can see it's probably our 3rd one, right? So Carl and Kathy have no cash flow. These are based on real-world examples. It's $1 million house. They owe $250,000 on their mortgage, $25,000 in revolving debt, credit card debt. Installment debt, $25,000 was a car loan. Okay, so they have $300,000 in debt, and they have $3,000 in monthly payments against that debt, leaving them with absolutely no cash flow. That's a tough position for someone who's either a retiree or a pre-retiree to be in, is to have no cash flow, no margin. It's very difficult from month to month making decisions. Do I cancel my club membership? Can I not play golf anymore? Can I not go out to dinner? There's a lot of decisions that have to be made knowing that we don't have the money to do it, okay? It's a game changer when we can actually flip the scales here. Now, this loan in the US, you now have a mortgage balance of $330,000. $330,000, right? There's an extra $30,000 tacked on, and you're waiving that $995 fee. Your mortgage balance is going to be approximately $300,000. We wiped out your revolving debt, wiped out the installment debt. You now have required payments of 0. That's a game changer alone. We don't even have to go to the next slide, and you can already tell this person's life is very different now after the reverse mortgage. Simone, how long does it take to close one of these things in Canada?
2.5 weeks.
2.5 weeks. Okay, yeah, we have a guy in the States named Dave Ramsey. I don't know if you're familiar with Dave Ramsey. Yeah, he's not a big fan of reverse mortgages. His plan takes 10 years to do this. Okay, it's called a debt snowball. And he talks about paying off your lowest balances first, regardless of interest rate, and you're going to chip away at your debt, and you're going to get a second job, and you're going to eat beans and rice on Monday and rice and beans on Tuesday. You're going to sell your car because you're not using it enough. I mean, he has a plan that takes 10 years, and you did it in 2.5 weeks? That's amazing to think about. Now, for the advisors in the crowd, okay, well, these are 3 things that normally we hear people want to say, well, you need to pay off your revolving debt, pay off your installment debt, and establish an emergency fund. We just did that, right, in 2.5 weeks. In this example, Carl and Kathy, they actually got a lump sum of cash too, so that they have that emergency fund they don't have to worry about. But what do you do from here? Now, I can't advise because I'm not a financial planner. I don't hold those credentials, and I don't want to. I don't want to be a CPA either, but I know a lot of really good ones. And they're going to start down a path of suggestions for what you're going to do now that you have positive cash flow. Stop drawing from your retirement. Would that be a good start? Okay, because we show you're going to run out of money by age 80, and yet now that we've done this, you're going to run out of money by age 105. It's a pretty big deal, right? So they can use their software to model what's going to happen, but stop drawing so much money from your retirement to pay your mortgage payment. Maybe you want to take a look at some long-term care planning. You're going to optimize your life insurance needs. And again, if you're an advisor in this crowd, your list might be different here in Canada than it is in the States. But we take a look at highest priority to lowest priority from a financial standpoint. And obviously, because of the interest rates, revolving debt's got to go first. But we're going to take a look at your life insurance needs. Then we're going to look at deferred maintenance on your home. Maybe you want to make payments on a reverse mortgage. It just generally doesn't happen, does it, Simone?
A little bit.
See, some people do. Is there a tax advantage in doing so?
No, just peace of mind.
Okay. So in the States, some people will do this strategically in certain years to get a tax advantage. Like they'll make a giant windfall payment in 1 year instead of making 3 years of payments. So some people will pay down the reverse mortgage and preserve some equity for the heirs. Some people want to enjoy life. They want to travel. They want to check off a few bucket list items. And there's definitely something to be said for that. Let's talk about assisting kids and grandkids. That came up this morning in conversation, didn't it? There are ways that you can gift money, obviously, to your kids and grandkids at a time when they really need it. Can they afford to buy a house right now? Down payment requirements? Would a reverse mortgage be a great way to pass on generational wealth by helping them buy a home when it's very difficult to do so? Yeah. And so one of my close friends has a great saying he likes to use with his clients. I want you to give your money away with a warm hand, not a cold hand. That's a great way of expressing it, right? Because you really do. And he says, I want to enjoy my retirement with my kids and grandkids, which means every year they take a 1-week vacation on the reverse mortgage, basically. So do you want to assist the kids and grandkids while you're alive and you can see them benefit from it? Absolutely. Now, I hate to put charitable giving at the end, but if you have no monthly cash flow, that's your only other option, right? People want to give money to their churches, their ministries, their civic organizations, anything they care about. Can Carl and Kathy do that? Well, they can now. So you can see that it's not just that first slide. Now they have multiple options moving forward. Who benefits from a reverse mortgage? Now, we want to focus right here. It's all about us coming together collectively to help the homeowner with having more cash flow, more liquidity, more flexibility, and less taxes in many cases because they're not drawing from a taxable account. But everybody else wins too. This is a win-win-win-win-win-win situation, right? Everybody involved in this transaction wins. If you're a real estate professional, and I know we have some in the crowd today, you're going to get more listings, more sales, and higher purchasing power with one product that our competition doesn't sell, right? Very limited competition for this product in Canada. More listings, more sales, higher purchasing power because we're contributing a portion of the sales price. My uncle's a great example. My uncle right now just sold a home, $600,000, moving to a kind of a lower priced area. He's buying a home for $400,000 with the same square footage. It's about same size house, but we're contributing almost 50% because of his age. We're contributing almost 50% of the sales price, $200,000, which means he's pocketing $400,000 from the sale of his home. Okay, that's a life changer for him and for his wife because he's creating other types of financial instruments to take care of her. But that's where you can, if you're a real estate professional, you need to focus on listings, sales, purchasing power. And if you're working with a builder, the builders love this, right? Builders absolutely love, if someone uses a reverse mortgage to buy their home through a builder, they will buy more home and more add-ons and upgrades. Builder makes their money on add-ons and upgrades, right? So very important. If you're a financial planner, it's about more assets under management and client cash flow. Now, some advisors get paid on assets under management. Okay, remember, they're going to run out of money at age 80. Does the financial planner make any money off of that client after that point? No. So there are 3 people critically concerned about this client running out of money. The client, their kids, and their financial advisor. So we're helping the client, and we actually have more assets under management over a longer time period, which means the advisor has a client for a longer time. If you're a CPA or tax planner in the crowd, non-taxable retirement cash flow is something that's very valuable to CPAs. When I talk about home care, I'm not talking about home medical care. In most countries, that's actually easily paid for by some government programs if it's medical related. But if it's cooking, cleaning, toileting, companionship, driving people to appointments, home care is extremely expensive. And it's hard to pay for because it's private pay, which means you got to pay in cash, right? Or check. So when I talk about home care, the biggest challenge for home care providers in most of the countries that we've spoken to is staffing. It's hard to staff for those positions, right? It's a thankless job and it's very difficult. It's hard to staff. Their second biggest challenge is, I have a client that has this high of a need, but they can only afford this. But if you watch the ads for Equitable Bank, if your house is rich, you are too, right? Has everybody seen the commercials? They're awesome. Okay, so is it Frances? Yeah, Frances. Her house is rich, so she is too. Well, with home care, the home can pay for the care. And that's what the home should do at that point, right? If you need home care, your house should pay for that. And then lastly, I'm going to spend just a moment and talk about divorce options. So we call it silver divorce and gray divorce. Do you use the same terminology? Simone's nodding her head. It's my understanding gray divorce is 55 and older and silver divorce is 62, at least in the States, that's what we call it. Divorce rates have gone down in most of the countries that we've looked at, but not among the older, not among the baby boomers. Baby boomers are actually more likely to divorce than ever before. So we saw over a 20-year period of time that gray divorce doubled and silver divorce tripled. Okay, now, it was fairly low to begin with, but we are seeing a rising trend in divorces among older people, especially those that had dual income. Okay, so how do divorce attorneys and divorce mediators win in the reverse mortgage, and how can they help the client at the same time? There are two different strategies. One is called a spousal buyout. Spousal buyout is when someone says, this is my home, I want to keep it, but they have to pay a departing spouse. We can get a reverse mortgage on this home to pay a departing spouse who can then use those funds to work with their real estate professional to buy a home using a reverse for purchase. You see how this works? The second strategy, and I'll tell you a quick story about this. I was working with a top real estate agent in my market. We didn't work together. I knew who he was, he knew who I was. And I was sitting at a pool party and he asked, we're watching our kids jump in the pool. And he said, so what's the 30-year fixed rate today, Dan? And I said, I have no idea. I have no clue. And he said, I thought you were a mortgage professional. And I said, I am, but that's not what I track. I don't do what you think I do. And we started talking about the reverse mortgage. And he said, I'm interested. You can increase my listings, increase my sales, and increase my purchasing power. And now you've got my attention, right? I said, well, I'll tell you what, the next deal that comes across my desk, I'm going to let you work it. It turns out it was a divorce case, and they wanted to sell the marital asset, split it up, and both go their separate ways. He got a listing and 2 sales. He got 3 transactions. He's a believer now, right? He loves reverse mortgages. So the reason I put this on here is because everybody wins in this. I don't call these people lead sources or lead providers. They're partners. We have to partner together to make sure that the homeowner has the most efficient retirement. I'm going to talk to you a little bit about assessing the client's needs and goals. We need to have this conversation with the client early on. Now, someone mentioned Tom Selleck early this morning. I'm the guy who calls up their compliance department and tells them that they're breaking the law. Okay, so Tom Selleck is not the most compliant advertising campaign in the US, but this is not how the company that Tom Selleck represents sells reverse mortgages. They pick up the phone and say, oh, how old are you and how much is your property worth, right? That's all they want to know because they want to know if they're going to waste their time because the phone's ringing. That's not the way I recommend you do business. We talk about 2 critical phone calls. So if you're a mortgage professional, if you're a broker in here today, just know that there are 2 critical calls to the client. One is a discovery process. We want to know what ails you. What are you looking to accomplish with a mortgage? What are you looking to accomplish if a reverse mortgage, if they come to you specifically for a reverse? And so this is a discovery phase. We want to know, what are your issues? What are your goals, dreams, aspirations in retirement? What are you looking to accomplish? And they're going to answer. Let me just give you a typical example. Mrs. Smith, what are you looking to accomplish with a mortgage? Well, things are really tight right now. You heard that one before? Yeah, things are really tight. Okay. Well, how old are you, right? That's how Tom Selleck would go. How old are you? And how much is your home worth? No, the follow-up question is who, what, why, where, when, how, and how much. Now, if I've actually done this presentation. You may have seen this before. This is general sales. This doesn't just apply to reverse mortgages. This is any type of sales. You want to start with this process. The follow-up starts with those words because it's an open-ended question. The last thing you want to do is ask them a yes or no question. If you do, you're going to get a yes or no answer, right? And you're not going to learn anything. If they said, okay, what has you looking at a mortgage? Well, things are tight. Well, I'm sorry to hear that. Would a little extra money help? Yeah, that's a yes or no question. The question is, oh, why is that? Why are things tight right now? When did this start happening? And when you say tight, how much are we talking about? So you start writing notes about the client and determining this is the discovery phase and follow-up. And you can use as many of those as you want. Sometimes I've heard, I'm the guy who audits the calls. When you hear on the phone it says these calls are recorded for quality assurance purposes, yeah, I'm the guy who audits those calls to find out whether a sale could have taken place. And so sometimes we hear on those calls that people they jump through this too quickly. You've got to be patient, and sometimes people will go 10 levels right here. Who, what, why, where, when, how, and how much to get all the details they need. And then your recap starts with a very critical word, if, because I have not qualified the client yet. I don't want to qualify the client yet. I just want to know if we can leverage some of your housing wealth to pay off your existing mortgage and have no monthly principal and interest mortgage payment, then Mrs. Smith, paint a picture for me about how your life might improve. And she starts thinking, oh, well, that would be pretty attractive for me, right? Get them thinking with the recap. If I can help you in this way, then would this, and if she says, no, that wouldn't help, then we're barking up the wrong tree. We're not actually going down the right path of the sale. So I want to recap with that question. And she tells me, hey, this would actually be fantastic. Okay, Mrs. Smith, if I'm hearing you correctly, you'd like to look at maybe accessing some of your housing wealth to pay off your existing mortgage. But before we discuss any products that might be a fit for you, is there anything else you'd like to accomplish? Some sales coaches will tell you never to ask a yes or no question. That's a yes or no question. The reason you want to ask that question as a yes or no question is because it's time to move on. I want her to say, nope, you summarized it great. I'm ready to move on. And then I go into my checklist of 13 or now 20 concepts that they need to understand about the reverse mortgage. Does this make sense? I've rolled this out to countless companies, and I now hear it on their calls. Like if I hear an audited call, I'm actually hearing them go through these steps, and it's so much more effective, and we understand what the client needs. And yes, I will give you the slide deck if you want in a PDF form. So we'll make sure that we can get you the slides. But I've seen the benefit of this. And by the way, I call this stickiness. When you reach out to a client and they understand what I can provide and I understand what they need, there's a stickiness with that client where they're not going to shop you with another company. They're not going to drop off. There's an understanding between you that really helps the sales process, where everybody understands what they can contribute. Now, remember, I audited these calls. Avery was case number 1. Okay, it starts with an A, so this was case number 1. That's not her real name. But Avery wanted to take a trip, and the broker handled the first part correctly. Hey, Avery, what has you interested in a reverse mortgage? She called specifically for a reverse mortgage. And she said, well, I want to take a trip. And the broker was kind of flippant about it. Like, Oh, well, that's great. I want to take a trip too. That's so exciting. Okay. And he said, well, what's your home worth? How much do you owe on it? What's your date of birth? Really? Is that where you want to go with this client? How's your credit? Does credit matter here? A little, okay, yeah, so there is a credit requirement. But so that's qualifying questions, right? Completely missed the opportunity. And we could tell that Avery was not happy with the call and she dropped off. We got Avery back on the call and she was handled by another broker. Hey, Avery, I understand, I think it was more like, hey, I understand you were interested in a reverse mortgage. Can you tell me a little bit more? And she said, yeah, I'm wanting to take a trip. You may have seen this example before if you've heard me present, but the follow-up was very interesting. What would you ask, by the way? Yeah, where? I mean, it's a natural follow-up question. If you're a conversationalist, you know, oh, I want to take a trip. Your natural follow-up question is, oh, where do you want to go? Well, now that's interesting. She wants to go to Africa. Oh, now I'm really interested in the conversation. My next question would be, why? Yeah, right? So you can see the who, what, why, where, when, how. I know people who actually put that now on their computer. Who, what, where, when, how, and how much. Because they know that these questions facilitate a conversation. Oh, that's interesting, Avery. Why did you choose Africa? Well, it's wildlife. I would like my family to see my heritage. Nobody in my family has ever seen the motherland. And I want to take them on a safari trip to see the big cats and all the animals. And I'm just really excited about, taking everybody on a trip. Well, she said everybody. I'm listening. And the broker said the right question. Oh, well, who's going with you? Okay, that's the natural follow-up question. And she said, I want to take all of my extended family. Well, to me, I'm thinking dollar signs. It's going to be expensive, right? Like, oh my goodness, you're pushing me here. How much is that going to cost? Now, she said $25,000. Try doubling or tripling that, right? Has anybody been on a safari? Yeah? It's a lot more than that, right? Okay, well, she doesn't have that money, but I thought it was really interesting where the broker went next. Hey, Avery, why haven't you gone? I know what the answer is. She doesn't have that kind of money, right? Okay, well, I've always been working, and there's no way I could afford to do this, but I know that my house is rich, and I am too, right? That's what I'm thinking when she said it. And this is where the conversation turned. Hey, when are you planning on going, Avery? Well, I actually have to go this summer because I don't think I'll ever be healthy enough to go. And now you realize it's a bucket list item. You realize that this is her legacy to her family, and she knows that physically she's deteriorating. I don't recall whether it was I don't think it was a terminal illness, but it was kind of like things are never going to get better for me. And so she knew, if I'm going to go, I have to go this summer. This is urgent. Well, now that creates a sense of urgency, and you get a chance to experience that with her. The broker said, I want all the pictures. You're going to do a slideshow for me when we're going to make sure I want to be involved. As a financial professional, I want to be involved in your experience going to Africa. Well, that's a different conversation, isn't it? Now, the next level, once you determine their need, and we've gone through the whole discovery phase, we've explained all the key concepts, well, now they're going to come up with objections. And you've seen these. I actually have a list. I think it's 13 or 15. I think I have over 15 objections that we commonly hear now, because as professionals, we need to be able to overcome those with explanations that make sense to the client. I cherry-picked 6 of them that we probably hear more often than not, except for that one, the expense objection. That one's been eliminated by the Equitable Bank. Okay, so let's go through each one of these and then we'll wrap up with some questions, all right? The reverse objection. There's a stigma associated with reverse, and I'm proud of what I do, so I don't apologize for it. I know, Simone, you and I talked about earlier that there was a time, back in the mid-2000s when, hey, it was kind of embarrassing when you said that you were a reverse mortgage professional, right? Because you knew what people thought about you, and I've lost friendships over this. I said, no, you don't understand, and you could defend your position, but I know more about reverse mortgages than you do, and you're not willing to trust me. But I've heard reverse mortgages are bad, and maybe we should only use this as a last resort. And sadly, the financial planning, some in the financial planning community have bashed us to the point where it's hard because they trust their advisor, right? But we know how life-changing this can be. And so, yeah, that's an objection. My response now is, why? Why do you think they're bad? These products have evolved over a long period of time to make sure that the consumer is protected. Really, what a reverse mortgage does is it just simply unlocks an otherwise illiquid asset to help you grow old in your own home. Who's opposed to that? I don't know how you could be opposed to this at all. A reverse mortgage simply unlocks an otherwise illiquid asset. We were talking this morning about the 3 buckets of wealth, which is something my boss talks about a lot. Bucket number 1 is the money you put into the bucket for future income, like we call it Social Security and pensions. So you put money in over a period of time knowing that you're going to get that money back, usually government programs. But bucket number 2 would be your traditional retirement savings, what we think of as traditional retirement savings. Bucket number 3 is your housing wealth. And when I'm hearing you talk about property values in this area, that is the largest asset for most of your clients. Would you agree? Housing wealth is the largest asset, but how are you going to access that money if you need it? The only other ways are to sell the home. Nobody wants to sell their home. 90% of them want to age in place, right? That's consistent between Canada and the US. 90% of them want to age in place, so selling is not an option. Well, have you considered leveraging it with a reverse mortgage? Okay, you can get that money out. All right, the debt objection. Hey, I've worked hard to pay off my mortgage. Now, in some countries, they paint their door red. Has anybody heard this? Yeah? Oh, you're familiar with this. I see some nodding heads. It doesn't generally happen in the States, but there are some countries where you paint your door red when it's paid off, right? Yeah, who said yes? Yeah? Yeah. Is that common here in Canada? No? I hear in Great Britain that's pretty popular, right? Scotland, Ireland. There are countries where they wear that as a badge of honor, right? I've paid off my mortgage, and a lot of this happened because of the Great Depression. Have you guys heard of mortgage burning parties? Yeah, really? Okay. We don't do that in the States, but I hear that some of the greatest generation and older baby boomers remember mortgage burning parties, right? So you wear that with pride. I paid off my mortgage, which they think, well, okay, that eliminates any risk of me losing my home. Remember, the reverse mortgage doesn't carry a monthly principal and interest mortgage payment. It doesn't increase the risk of you losing your home. So yeah, I've worked hard to pay off my mortgage. Why would I deliberately go back into debt? Yeah, I've had family members tell me that. For many homeowners, their home equity is their largest asset. However, to access that, there's only 2 options: sell it or leverage it. Sell it or obtain a reverse mortgage. If there were another way, great. I would love to see a more efficient way than a reverse mortgage for tapping into your home equity. Some people have said all debt is bad. We've seen that on social media. Yeah, that's just, when 497 Fortune 500 companies use debt as leverage, there's only 3 companies in the Fortune 500 that don't use debt as leverage.
What are they?
I don't know. That's a good question. I'd like to see that data. That's a great question. Okay, this is a big one. You guys have heard this, right? You probably hear this all the time. Well, I've heard with a reverse mortgage, the bank will take ownership of my home. So I had a family member tell me that. Oh, I'd never do that. I said, why would you say that? Because I'm going to get one when I turn 62. And she said, oh, I don't want the bank to take ownership of my home. And then I hold up my book and I said, so you're telling me you didn't read this? That's a family member who said this. And I said, that's one of the first things you're going to learn about reverse mortgages. No, the bank doesn't take ownership of your home. That's not the way it works.
That's the case, because this is the number 1 objection that I hear, and usually in a very abusive language, you know.
Yeah, yeah, thank you. Yeah, so
It's first-hand experience not from the borrower, from their children.
yes.
Right?
And you know what? I'm glad you brought it up. There were some times when this did happen. And so I can tell you a little bit of the background of where this came from. And we've been fighting this for a very long time. In the States, there were products between 1961 was the first, between 61 and 88. There were products that were unregulated that did take ownership of your home. Now, my grandfather had one, and it was actually a fantastic product. Those products are actually not sold anymore, but he lived a very long time and was able to kind of take advantage of that. But he did give up ownership, but he got to stay in there. The first reverse mortgage that we're aware of was actually in France. That was Jean Calmette, who was the oldest person to live at that time. And now we understand that it may have been fraudulent, that was actually her daughter. You might want to read an article about that. But she kept living in the house. Yes, she lost ownership of it, but she was allowed to stay there until she died. So there were products that did operate that way. There's another reason why this myth is perpetuated. During the housing crash, people's property values dropped and their loan balances were up to here. So what happened in the States, I'd have to check and see what happened here, but in the States, if you're upside down on a reverse mortgage, the heirs look at it and say, it's a non-recourse loan. There's a no negative equity guarantee here in Canada. So they just took a step back and said, it's a non-recourse loan, I don't have to worry about it. In those cases, the bank actually took the home through the foreclosure process to sell the home at a loss. And so that's not really the way it's supposed to work. And they could have done a short sale, but they didn't want the hassle of doing it. And so there were, I would say from 2008 to 2012 or 13, we had a lot of heirs that just took one step back and said, it's not my issue. It's not my responsibility to take care of this. So we're just going to let it go. And the bank did take the home. But they did it through the foreclosure process because they didn't want to sell it.
So they were not paying the property taxes and utility bills? That's what happened?
Yeah, they didn't pay the property taxes and the loan matured because the last borrower died. So,
I see. Okay.
so the last borrower passed away and the heirs said, well, you're $100,000 upside down on this reverse mortgage. Well, I'm just going to exit over here and I don't have any responsibility. And they're right. They could do that. But ultimately, the bank has to take the home through the foreclosure process to sell it at a loss. And we saw that happen a lot. And our industry took a hit for that. We lost a lot of money during some of those years. Now we're back profitable with these. But there were times that perpetuated this myth that that's naturally what happens. Now, what most people think is, well, I'm giving up title at the time of closing or when I die. But what actually happens is it's just secured with a lien, just like a traditional mortgage. The heirs can inherit the property and they can refinance or sell it at any time. It's up to them what they do with the property. So the real unfortunate part about the myth is they think they're giving up title on day one or when I die, and neither is the case. Now, ultimately, the bank could take ownership through the foreclosure process, but that's usually because of property taxes or because the heirs said there's no economic incentive for me to keep the home. I'm just going to give it up.
So heirs can, okay, that's my question. Sorry, if I'm taking it.
No, that's a great question. I'm glad you brought it up.
Heirs get away with that if there's a negative equity?
They can. In the U.S., we'd have to see how it happens here, but in the U.S., there's no recourse to the heirs, the estate, the borrower, and so they can just simply walk away and then the bank would obtain that. Unfortunately, with the attorney's bills to foreclose on someone in the States, it runs between $25,000 and $40,000. So for us, it hurts us. We would rather they just sell it at a loss and we just take the write-off. But there was a time when this happened prior to 1988 where, you did give up ownership on day one. It just doesn't happen anymore. Great question. Thanks for bringing that up. This doesn't happen here. So this is a U.S. problem only, but I've heard that reverse mortgages can be very expensive. The closing costs seem really high. Well, they are. And I'll still probably get it because I know that I'm going to save more money in taxes than the costs on the loan, right? So I have ways that I would use a reverse mortgage in the States, but hey, the Equitable Bank team has solved this riddle. And I still look at the figures and I'm thinking, man, if I could sell that property in the state or sell that product in the States, we would sell the daylights out of that and do very, very well. So maybe we have a lot to learn from our Canadian friends. All right, so when this comes up, that someone says it's really expensive, our natural response is, well, compared to what? What product are you comparing it to? It's really difficult to compare costs when the reverse mortgage is so unique and has so many great advantages and consumer protections. It's offered at a competitive, even better rate here in Canada, but it's offered at a competitive interest rate with a no negative equity guarantee, and it doesn't require you to make monthly principal and interest mortgage payments till after you've passed on and you sell the home. That's very valuable. So a national publication in the States reached out to me and said, I'm writing an article on the cost of a reverse mortgage. And my first reaction was, whoa, wait a second. Are you also talking about the incremental advantages to them in retirement of having an optional payment? And she said, no. And I said, well, then I think your article is misguided. You're talking about costs? And so I said, and I was probably being a little patronizing, but I said, let me give you an example. I have a black car for sale in my driveway for $10,000. What would you want to know about it? Because price is what you pay and value is what you get. That's something Warren Buffett taught us. Price is what you pay and value is what you get. You're getting something very valuable here. And I answered for her. I said, you'd want to know the make, the model, the year. Am I a smoker, non-smoker? Has it been maintained? What's the mileage? Does it have a Carfax report? I mean, there's so many things you would want to know about the car before you spend $10,000. And so what you're getting with any costs in a reverse mortgage is something extremely valuable. Fortunately, it's costing you very little or nothing now here with your product. All right, I think we've got two more and then we'll wrap up. Anybody have some challenges talking to the children? Children can be a little bit selfish in this, so I understand where they're coming from, right? They think, oh, well, the house is paid off and that is my inheritance. But do they really want the house? No, it's rare, right? It's extremely rare. I have a friend that likes to say, nobody pulls up to the funeral in a U-Haul, with all their stuff. That's not the way it works. You generally don't move into your parents' home. You generally list it for sale with one of you, right? So it's not the house that they want. It's what the house represents, which is an inheritance. And so it's important that the kids are on the same page. Do you have any family nearby or that would want to jump on the phone that would want to be involved in this process? And it's either a strong yes or a strong no. People don't waffle on that question. They either say, oh yeah, Junior would like to come in and talk and make sure that everything's cool. And I would too. If my parents were about to make a pretty big financial decision, I would want to be involved. Right? I would want to learn everything that I can about the process. Sometimes they're going to say, nope, nobody wants to know about this. Nobody has to know about this, right? We're going to keep this between us. I don't want anyone to know that I have a reverse mortgage because I've already painted my door red. So, but hey, I've been thinking about this, but the kids are set against it and I want to leave the home to them. Do you really? There's actually more efficient ways to pass on generational wealth than to have them sell the home. All right, it's not uncommon. I would be opposed to them making a major decision. It may be a good idea to meet with your children, show them the value of the product, and explain how the no negative equity guarantee protects them. That's a really important phrase you want to include, right? Explain how they benefit in the process. All right, last one here, guys. This one is personal to me because our regulators in the States actually say this. And I've complained multiple times, oh, I've heard as the loan balance rises, my home equity drops and I don't want to lose equity. Is there a flaw in this thinking? What are they missing?
The value of the home.
The value of the home is appreciating, right? Home appreciation. And so I've written to our regulators multiple times. I get a chance to meet with them and I'm like, stop saying this. The last 8 years, it hasn't been true. The last 8 years, we've had so much appreciation that the average client is actually gaining equity with a reverse mortgage. And that's a story that doesn't get told very often, is that sometimes you only need a modest home appreciation to outpace interest accruals. And I give them an example. You have $1 million home that's increasing at 4%, which is a long-term average, right? That's the long-term average in the States. But you have $1 million home growing at 4%. That's $40,000. That's equivalent to 8% interest on a $500,000 loan. Okay, so you're going to find that in most cases, they're not actually losing equity, and this type of objection needs to be countered.
Thank you for tuning in. If you found value in this show, please subscribe to our channel on your preferred platform. We're available on Spotify, Apple Podcasts, and YouTube. Your support is incredibly appreciated. We also welcome your reviews and feedback, which are crucial in helping us deliver outstanding educational content. Feel free to share your thoughts. A 5-star review would be fantastic if you think we earned it. Lastly, a vital announcement about Backpack Buddies, our chosen charity for 2024. This remarkable organization addresses a hidden hunger issue many are unaware of. In British Columbia, while school districts provide meals during school hours, numerous children face food scarcity at home, particularly during weekends. Backpack Buddies steps in to support these vulnerable children, ensuring they have easy to prepare, familiar food for weekends. This is achieved through collaborations with schools and an extensive distribution network. Your contribution can make a significant difference. With just $20, you can give a child in need a food bag from Backpack Buddies filled with enough meals and snacks to sustain them over the weekend and more. Once again, thank you for listening, and see you on the next one.